But now the International Monetary Fund projected Uganda's economy to grow to 6.3% in the fiscal year 2019-2020. This coming from 6.1% the previous fiscal year. And this, according to the fund, will be driven by an expansion in manufacturing and construction sector. We're now joined by Mira Clara, who is the IMF Resident Representative for Uganda. Many thanks for making time to speak to us, Mira. Just walk us through some of the Article 4 revelations. I know this is often a very, very long consultation, but just walk us through some of the highlights I left out.
Okay, thank you so much. So we have just concluded the mission for the Article 4 consultation, as you mentioned, which is our annual discussion with every member country in the IMF. What we find in the case of Uganda is that economic growth has recovered, as you mentioned, but progress in social indicators is still mixed. So we do find some good progress in a number of social indicators, but others, for example, enrollment rates in primary education or even poverty, have not improved as much as it would have been desirable. So the main challenge that this Article 4 finds that we think is critical for Uganda is to ensure that economic policies translate into inclusive growth. So what we mean by this is making sure that everybody benefits from the growth and that the economy creates jobs. So we see a need to create at least 600,000 jobs per year to accommodate the growing population. So this requires infrastructure investment, which the government is rightly currently undertaking, but it also requires investing in people by improving health and education outcomes. So here we think that it's very important to reverse the trend of declining budget allocations in spending in health and education, and also make this spending more efficient. And on the fiscal side, when we move to the fiscal side, our main concern here is the lack of an effective fiscal anchor, or the fact that the budget does not provide sufficient top-down guidance. So what we mean here is that it doesn't provide really a good guiding light for government spending, because successive budgets in recent years have revised debt projections upwards. So we are now projecting public debt to peak at 49.5% of GDP in 21 and 22. So this means a deterioration in the debt metrics, which means that as of now, Uganda has to devote 1 in every 5 shillings collected to pay interest. So
right.
We suggest, sure.
Definitely, Clara, you've just touched on a whole lot of things. Let me just take you back just a bit. You do touch on the movement in the monetary policy that has been quite accommodative, if I could just put it like that, and how this has related to credit expansion in the country. Just give me some of the figures here. So you are right, but what we think is that Bank of Uganda has successfully balanced both the inflation objective and the supporting economic activity objective. So monetary policy has maintained low inflation, and we think it can stay the course. So headline inflation stood at 2.7% year on year in January, with core inflation at 3.4%. So this is well below Bank of Uganda 5% inflation target in the medium term. So this also takes us to one of the issues that we discussed, which is the financial sector. So indeed, as you mentioned, we find that private sector credit has gained momentum. And we also find that Bank of Uganda has been very successful ensuring financial sector stability. So this includes through resolving banks that pose systemic risks. And in doing so, they have protected the savings of many small depositors. But yeah, as the new credit cycle starts with private sector credit improving, we think it's very important to maintain Banks of Uganda's strong supervision and regulation. So in particular in this area, we think it's very important to continue working with banks to strengthen the financial reporting, the internal controls, and the governance structures, which were at the core of one of the most recent bank failures in Uganda. Fascinating indeed. Let's stay on the monetary policy, Mira. I do remember reading a regional economic outlook from the fund that did highlight that 2 countries have
managed to actually embrace inflation targeting and kind of have a sweet spot between inflation targeting and a floating exchange rate policy. That is South Africa and, surprisingly, Uganda. Just give me a sense of how, going forward, inflation targeting is working, because just across the border we're seeing Rwanda migrating away from inflation targeting towards a more a price level target.
So what we see in Uganda is that Bank of Uganda has been successful using inflation targeting to ensure low levels of inflation. And at the same time, recently, they've been able to balance the objective with supporting economic activity. So we think inflation targeting has really been useful for Uganda, has really delivered. And indeed, as you mentioned, this is coupled with a flexible exchange rate. So when you put these two together, the flexible exchange rate provides a buffer against shocks, and Bank of Uganda, focusing on monetary policy and focusing on its 5% inflation objective, has been successful and has provided a low level of prices. So in the medium term, we do see inflation increasing slightly, but it's never going to go above the comfort zone of Bank of Uganda, or this is what our current projections and the current policies are saying. So we think the framework has been useful for Uganda, and it has been well implemented.
Right, let's delve into some of the projections and the outlooks that you have made. The president has often pushed the oil production 1 year after the other. And this time around, they are saying that it would be coming out maybe 2022. On your end, you're saying 2023. Give me a sense of the outlook here for the oil production.
Well, this is what we are getting from conversations with the main stakeholders in the sector, but we are no experts here. So what we understand is that there is still work ongoing and that the final investment decision is expected this year. And then after that, there will need some time to build the actual infrastructure, but it could be around that time. So this is one of the factors that is behind our medium-term outlook, indeed. So our medium-term outlook is positive. This is the growth numbers that you were mentioning. We are projecting at 6.3 for the current fiscal year, supported by manufacturing, construction, and services. And we think next year it's likely to remain around the same. But in the medium term, we see it going up to 7%. And this is supported by the oil sector investments, the infrastructure investments, and the expectation that private sector credit is also going to remain supportive.
Right, Mira, another striking feature in your Article 4 is of the debt. Now, debt for the past few years, the percentage point for the country's debt has been rising by at least 1 percentage point. That's maybe for the past 3-4 years. Give me a sense of, right now we're at what, 49.5%. Do you see the possibility of a downgrade from rating agencies once the country actually breaches that 50% mark?
So no, we are today, the latest data that we have, which is for end June 2018, showed data at 41% of GDP. We are still far from the 49. The 49.5 that I mentioned, this is the projected peak that we think that will be reached if if the projects that are planned are implemented as we think they will be implemented. And this will be reached in FY 21-22. So yes, it is getting closer to the 50% level, and we recommend that it would be useful to try to stick to that 50% threshold and not to go above it. And this would provide a buffer in case something goes wrong so that Uganda could still react. So having said that, and having said that the debt metrics have deteriorated, truth is that when we look at our draft debt sustainability analysis, so far what we see is that Uganda would still remain at low risk of debt distress on the basis of our preliminary debt sustainability analysis. But there are vulnerabilities that are important, and we think it would be indeed helpful to try to stick to that level and not go above it.
Right, Mira, finally, if we're to touch that current account, we have seen it widen, but when does one actually start to worry about the current account? I want to put this in perspective to that economic notion that the current account kind of moves inversely to the capital account. Just give me a sense of the two and how the country is faring thus far.
So indeed, the current account deficit increased in the fiscal year that ended in June. And the current account is pretty much guided by a high level of imports of goods that are related to the infrastructure project. So the large infrastructure investment projects come with significant flows of imports associated. So even if exports have grown this year, they grew by 9%. Imports grew by 17%. So, and this is mostly related to the infrastructure project. So yes, financing came mostly in the form of debt for these infrastructure projects and also foreign direct investment. And Uganda also experienced a slight decline in international reserves at the end of the year.
Right, Mira, allow me to put a dumper on this particular conversation. Fascinating stuff indeed. That is Mira Clara, who is the resident representative for the International Monetary Fund in Uganda.